vision or thesis or something like that. When we were thinking about it, diversity purpose, this was the sentence that we want to achieve through the fund. Because when you guys think about London, I mean, the London is a very internationalized city, but still, like most of the money, like more than 90% money go to the from the investment banker, over 40 may why this kind of thing. But when you see the actual exited the founder, but it's not true. So we wanted to solve this kind of issue. That was how Simsa was created. So it was the same that information. So like when we see the statistic, I mean the female founder or other female founder or college dropout, or for example, or very youth founder, even though they have a good talent, or they also have a very good track record and everything, but they don't get the enough funding, so which was we wanted to solve. Yeah, this was the basic information about the Simpson Venture Fund One. So we invest in UK and Korea. Further, we invest in Europe and the Asian market. And our focus area is like fintech and deep tech, but we can invest in all different tech startups. Yeah, and when we started the fund, we want to set up our own USP, unique selling point, or unique selling proposition. And what we did was like we described ourselves as the first UK VC in South Korea. As you can see, I am from South Korea, but my two different founders are British Indian, and we were from the same university in UK. And there was no British fund in UK. Back in 2021, back in 2022, that's how we started this fund. And the main reason why I'm explaining this kind of journey of the Simpson as an introduction is also we were also like still we are VC startup as well, and our journey would be help you guys to enter the Korean market, because Simpson also entered the Korean market as a VC. And these three members are Simpson co-founder, and one is based in UK, and one is based in Dubai, and one is me based in Seoul. And not only we make investment as a VC, we also helping startup for their global expansion or global growth. That will be in our strategy. Yeah, these two slides is just about how we are supporting the startup. So I will skip through it. Yeah, next I will give you guys a bit more information about the South Korean market kind of thing, because when you're trying to raise money or to do business kind of thing, understanding about the Korean market, especially VC market, would be very critically important. So first thing that I want to mention is like if you guys understand what is the South Korea social biggest issue or social problem kind of thing could be very helpful. First, biggest social issue for now in South Korea is like a decrease in population, and another one is like a concentration everything on Seoul or capital city kind of thing, and saturated growth for large corporation or Samsung or LG kind of thing. These kind of three issues is the main issue in South Korea. But the good thing about the Korea right now is that global K-culture trend is really going very well globally, and the emerging tech like AI, blockchain, robotic, this kind of things growing very well in Korea as well. So because of this kind of environment issue, so the whole ecosystem of the Korea is now focusing on the globalization of innovation. That's why you guys that might be the reason why you guys are also here in Seoul to do the business in Korea kind of thing, because for the last, let's say, 5 to 10 years, Korea was not that good place to do the business from the perspective other countries startup founder. But now situation is really good, and because government is supporting, and even private company is also welcoming as well kind of thing. Trend is becoming that way. So this kind of understanding, this kind of thing will be important. Yeah, because of the 5 factors that I mentioned briefly, I just want to summarize the 4 points. First one is a government incentive and grant. Of course, this KSGC program is also one of the largest government startup incubating program for the global founder. But recently, more and more government grant or government program is happening, and the next year there will be more because I'm actively involved in the ecosystem. So it's not only for the small and medium-sized minister, but also Seoul city government or Busan city government, or like a Daejeon city government, kind of local government, or one specific institution. They are also trying to nurture the global founder in Korea, global founder in Korea. And another opportunity would be open innovation with the corporate and the startup kind of thing, because right now, Korean large corporations, they are looking for the technology they can be integrated into their company. Previously, they were only focused on the Korea startup, but they are now looking for the global startup as well. And of course, this kind of program, inbound, outbound globalization. And the fourth one is the revitalization of the local ecosystem. Fourth one can be a really good thing as well, because when you guys come to Korea, usually you guys come stay in the Gangnam area first, but after spending 3 to 6 months, global founder, they are also looking for other area to stay or to find opportunity kind of thing. So one of the recommendations that I want to give you guys, like Gangnam area is of course it's really good area, but there's other opportunity as well, especially local ecosystem kind of thing. And if you can find a suitable local area for your business, local area can be also really good opportunity, because they are going to give you the more benefit. That is also very important, and the less competition. And of course, even if you do your business in local area in Korea, I recommend you still do the business in Seoul as well. So it will be the best strategy, because even Simsan, like I said, we are also entered the Korean market, and we have two different operations in Korea, one in Seoul and one in Daegu for now. There is another city in Korea. Yeah. Next one is like a private investor information kind of thing. So I separate them into two categories. First one is like a global investor investing actually global investor investing Korean market. And second one is like a Korean investor investing globally kind of thing. So those are just some of the example kind of thing. And of course, I cannot confirm, but just my opinion is like you guys might have a better chance to get the money from the second type of the investor, I guess, because just my opinion is like these kind of first type of the investor, they are more focusing on Korean market to find a Korean founder usually, because they are already their own branch, let's say Paris, London kind of thing. So if you can target the Korean investor who have been already investing into the global startup kind of thing, there will be you guys have a good chance. And this kind of example was the SP investment, Smartget investment, or Sinang Venture investment. Those kind of are investing heavily globally. Some of them investing only focusing in the Asia, but some of them investing like America kind of thing. So important thing is, of course, it will be difficult, but at least doing the background check, like a website and everything, will be important, because one thing that you guys should know is like usually Korean investor, when they say they investing globally, they usually focusing on the America, because like I said, 5 years before or 10 years before, Korea's startup ecosystem was only dedicated to the America ecosystem usually. That's why Simsan has been built in, because we saw the opportunity between Europe and Asia, starting from the UK and Korea kind of thing. But recently, everything has been changing more and more. But so if you can, that will be the one thing that you should consider when you meet the Korean VC. And another thing is the corporate venture capital, corporate VC kind of thing. And one of the recommendations that I want to one of the recommendation would be just if I were you, I mean, if I in your position kind of thing, I prefer getting the money from the more like just a general VC, not the corporate VC, CVC kind of thing. Just my opinion, because main reason is, I mean, usually if you got the money from the corporate VC from the beginning, it might be like there might be unnecessary pressure from the corporate VC. I mean, I'm not saying this always, but you cannot say no to your investor if your investor like a large corporation like a Samsung or LG kind of thing. So my recommendation, or if I were you guys, I would let us say let's do the collaboration first, and then let's discuss about the funding later. There will be a much safer choice. And when you think about the perspective of the CVC investor, the interesting is when they find the founder really good, they say, "Oh, let's invest it first." But if they find less attractive, they say, "Let's do the collaboration first." It's the same. So because if I were the CVC investor, I would do that. Because if I can invest it straight into the startup, if I do that, I will have a proper alignment with the startup straight away. I mean, that's I mean so it could be a good thing, it could be a bad thing. So I recommend the general investor at the early stage, but it's not always the answer or something. But in the another thing to mention is like these corporate investors are a little bit different. They are just like they are just a venture capital fund, but not like a CVC or something. So in Korea, there are two different corporate VC, a pure corporate VC and like a pure CVC. As another one is just a VC fund from the corporation. The main difference is, like I said, CVC is main purpose of the proper CVC is just finding the strategic alignment with the startup. There will be first purpose, but the second one is like more like just investing. They're more focused on the investment. So these guys are more focusing on the investment side. So that's why I put their name on the slide, because I don't want to say a bit negative about it. So anyway, and another thing is, as you guys know, that one of the reasons why Korea ecosystem made a significant growth for the last 10 years is because of the government support. But if you guys can understand the Korea funding landscape, they will be very much appreciated, because whether you are get the money from government, whether you are going to get the money from the private VC, whether you are get the money from the CVC kind of thing, but I saw from some statistic saying that almost 80% of money is actually from the government, whether you get from the private, whether you get from the government, because government is the main LP kind of thing. So if some of you guys not familiar with the limited partner, which is LP, LP is like investor for the venture capital fund. So VC also get the money from the LP. So if you can understand about who will be the LP kind of thing, they will be very important. And these three LP, KV, KDB, K growth are the major three fund of fund. I mean the limited partner in Korea. And in Korea, usually VC is like well, when VC try to raise money, they usually get the money from this kind of fund of fund first as a lead LP investor, and then we find the other private LP investor kind of thing. So understanding this kind of structure can be also important as well, because when LP give the money to the GP, I mean the VC, usually they have some kind of condition like you gotta invest in deep tech, you gotta invest in Korea, you gotta invest in globally kind of thing. So understanding limited partner will be very important. And the other thing is, as you can see, this kind of thing, this kind of institution are all of them are also government institution, and getting the fund. I want to say that just my personal opinion is Korean is the most well structured ecosystem in terms of the government supporting kind of thing. One of the reasons is not only VC funding, but also like a debt financing, everything. You guys can get you guys have a better chance to getting the money compared to the other country, to be honest. And even when you try to get the money, this kind of kibo kind of thing, if you can set up the entity in Korea, make a good some traction in Korea, you can even get the some that kind of thing. So I strongly recommend that using all different government institution, whether for equity funding, whether it's debt financing, or whether just the government granting everything. So understanding different structure of the government agency or institution will be very, very crucial. Yeah, and this is some example of the local government related institution in Korea. As you can see, this of course these are not all of them. There are tons of the different government institution in Korea. They are all nurturing a startup, interestingly. And another good thing is they are all trying to nurture the global startup or a globalization kind of thing. So this will be the some of the example. And the major city usually like Incheon, Seoul, Incheon, Daejeon, Daegu, Busan, Ulsan, Gwangju, these kind of city are major city, and they are all nurturing the startup, especially globalization kind of thing. So you guys can find opportunity in the local area as well. And recently, I heard that Busan city is really pushing a lot to globalize the startup ecosystem kind of thing. So the Busan can be the really good. You guys can find a good opportunity as well. And like I said, one of the reasons why you guys can find a good opportunity in the local area is biggest social issue in Korea for now is a shrinking population. I mean, a decreasing population. That's why they are trying to invite a lot of foreigners to the Korea, not only startup founder. So which means you guys can get a better, let's say, benefit from the government kind of thing. And of course, you guys can do business more smart way. I mean, the setting up the entity in local area, and of course, you guys also still can do the business in Seoul as well. So that's not an issue. So you can be a very smart about this kind of thing. And another thing is, some of you guys already know about it, but in Korea, university has a very crucial role in terms of the technology innovation, especially in Korea. There are science and engineering focused with 5 different universities in Korea. KAIST, UNIST, GIST, DGIST, PostTech, this kind of university is very important, and other universities as well. They have their own investment holdings company as well. And if you guys are like a deep tech or high technology startup, finding some collaboration with the university first can be a good strategy as well. Because like I said, one of the strengths of the Korean ecosystem is like a government is giving a lot of government grant for the R&D research and development. I mean, it is very generous. I mean, even if you are not successful that much, they are not like asking for money back or kind of thing. So which means if you can, one of the recommendations I want to give you guys is if you have a good technology advantage, find a partner in the one of the university. Let's say you can do the R&D project together with let's say one university and your startup as a consortium or something like that, which means you will be able to make some kind of like uh, 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 some kind of POC in Korea kind of thing, which means you will be able to save a lot of money because risk hatching is very important when you're trying to enter the other country kind of thing. So I always strongly recommend that leverage the relationship in Korea because that will save a lot of cost from you. Yeah, and another investor type would be impact investor kind of thing. And one of the interesting point, I mean, about the Korean ecosystem, it could be just my opinion, but I visit many different Asia country, but among the like highly developed country in East Asia, especially East Asia, impact investor investing ecosystem wise, Korea is very well developed. So this kind of means KSIS or Sopung Impact Square, those kind of are major players, and there are small players. There are a lot of small players as well. This guy, from the perspective of this investor, global founder are usually considered as one of the impact investor target. I mean, even from Simpson, I mean, the Simpson, we are not pure impact investor or something like that. But like I said, we want to investing into the different founder kind of thing. So we are interested in investing like a founder from other country kind of thing, of course. So this kind of investor group, you guys are also can do the research and find them, meet them as well for investment. And I also already know that some of them already investing into the global startup as well in Korea. Yeah, another thing is I just prepared the two different successful cases of the global startup in Korea. One is a TerraView. They are like a UK fund. This is very interesting cases. For me, this is one of the very interesting cases because they started the company in UK. Founder is from UK and they grow their company in UK, but they couldn't find many client in Europe because they are doing the semiconductor manufacturing kind of business. And as you know, semiconductor related business, usually most of them concentrate in the East Asia, Japan, Korea, Taiwan kind of thing. So they got the funding from the Korean investor later stage, and they are now already in the process of the going IPO in Korea Stock Exchange, which is very interesting because this startup will be the first one in Korea got listed from the UK startup kind of thing. And the main reason why I know this startup is my close senior VC CEO. He invested into this company, so he eager to introduce this company to me. But I didn't meet him yet. But of course, I will meet the founder. And as you can see, this is one of the big trend. I can see that because I'm on the ground, not only in Korea. I'm also in the like a UK, Europe kind of thing. One of the different trend compared to back in 5 years ago or 10 years ago kind of thing, when European deep tech startup, they're trying to scale up their company, they didn't look for the East Asia that much in the past. But now it's different. They are looking for the opportunity in Taiwan, Korea, and Japan heavily. One of the reasons is because of the America-China kind of situation, they need to find an alternative market and develop enough. Market size is big enough. Capital market should be developed enough. This kind of criteria. I mean, because of the more and more deep tech startup kind of these founders are coming to Korea recently. So this will be the very successful cases in Korea. And second one is indeed this founder is also a friend of mine as well, and the Pekativ founder, Switzerland founder, and he just started business in Korea and successfully have been doing business, and he raised money from Korea as well, and now he's trying to raise. I think he also raised money from Japan as well, and he is focusing on the Korea and Japan market heavily, and he is looking for more opportunity in Asia, more than Europe, kind of thing. So these two are the main successful cases in Korea, and if you guys have a question, or you guys can ask more about the company later in the Q&A session. Yeah, next one would be just how to raise money from VC kind of thing. Some of the information might be bit basic for the founder who are in the latest stage, but anyways, I just wanted to input all the information kind of thing. Yeah, this is just the basic information. When I meet the founder, sometimes the founder always just have one same deck, and which is not a good idea because investors are not that kind enough to read everything about the IR pitch deck because, of course, investors also have our own process. When startup go to the more serious level, we are going to read the deck more in detail. But the initial stage, giving a brief information better. So just my personal opinion is preparing three different deck and using the three different deck depending on the situation is always better. And especially if you want to protect your IP or something, you can also just share the teaser deck, like a 1-pager or 2 to 5 pager kind of thing. And then when you go to the demo day, the IR pitch kind of thing, you can use the pitch deck, 10 to 15 page. It's not the exact number, but around. Because if you use too many slides in the demo day, investor cannot understand. To be honest, when you think some people think that investor will understand everything about your startup kind of thing, but it's impossible because even you founder, not even 100% sure about everything in your startup, and the investor see your startup within 10 minutes and understand everything. That's impossible. So just to summarize important key factor, 10 to 15 pages, that will be enough. And when you meet him or her on a separate meeting for the 1 hour, 2 hour discussion, at that time you can use the full deck like more than 20 page, 30 page, 40 page, whatever number you want to use. I mean, they will be much better because I don't want you to pour too much information on the founder kind of thing. Yeah, these are just the basic information or what kind of information should be in the deck, especially some of the mistake, for example, why now this kind of thing. This section is very important, but many founder are missing this part. I mean uh, let's say, for example, you have a really good idea, but the timing is not good enough, you cannot be successful kind of thing. It happens a lot in the startup ecosystem. So if you can persuade the investor about the why right now is the good timing kind of thing, they can be very critical as well. And the market size, this kind of course important. But the more important thing would be why you are coming to Korea market, why you are focusing the Korean market kind of. If you can persuade them, they will be much more important because investor would want to see them. And I'm also founder myself. I mean, the VC founder myself. So I also work in the same situation, still in the same situation, to be honest, because my company has been just 4 to 5 years. So I know that uh, uh, no one know that I'm going to be in the Korean market for the 5, 10 years. No one know. Nothing is guaranteed. But at least you gotta give some commitment to the ecosystem kind of thing. Because my friend Sai Chopra, I mean my co-founder, he come to Korea, to be honest, more than 20 times to raise money, to build a relationship, to build like a company together kind of thing. This kind of like a dedication made it happen for Simpson kind of thing. And the other detail kind of thing, I will explain a little bit more detail about just the key important factors. Yeah, this is the example of Simsa back in 2022, 2023. As you can see, this was some of the slide that we used for our own fundraising kind of thing. Why South Korea? Why South Korea? Because we also need to persuade investor why we are trying to enter the Korean market, why we want to invest in Korean market kind of thing. So basically, we are also in the same situation. And not only for the Korean investor, but also like a UK investor, other country investor kind of thing. We try to find our own strategy. We are trying to find our own competitive advantage compared to other investor kind of thing. Yeah, this is just a basic information kind of thing. Yeah, I know that meeting the investor is very difficult, especially for the global founder. So that's why I strongly recommend that you should you not only you should use the government institution, but also you actually need to do some actual collaboration with like a university or a government institution. If you do that collaboration will lead to the potential other partner or potential other investor. Because from the I know the Korean investor mindset, they want to see some kind of actual proof which is working in Korean market kind of thing. So if they can see them in person, I mean here on the ground kind of thing, they are going to invest straight away. So that will be very important. And know your investor. And this is about the like I said in previous section, like a venture capitalist, CVC, government investor kind of thing. They will be very important. And consider other funding option kind of thing is very important. I always emphasize that consider other funding option because although I'm a VC, the best founders they don't need to raise money always kind of thing. You don't need to raise money. I mean, just because you raise money from the VC doesn't mean that you are successful or something like it. A venture capital investment is just your option, one of the option. So you can find other option that will be important as well. And especially when you try to raise money from the global market kind of thing, just my opinion is like a timing fundraising schedule is very crucial and important. So I always recommend that do not spend too much time on the fundraising. Focus on the building the business. And if you build a solid business, fundraising will come follow. And when you reach the certain point of the business development for your technology business, everything anyway, that time you can actually start raising kind of thing. It will be much better for your time and the energy and the resources saving. And of course, just making relationship with the VC, you can start from the early home, but fundraising costs a lot, consume a lot of time, more than expected, actually. Yeah, after pitch about kind of thing, I mean yeah, well, when you go to the demo day, it's more about more like in making an initial relationship. So I recommend you that making an excuse for a follow meeting or a casual just a coffee catch up, everything is okay. So because just a demo day, investor never investing, they straight away kind of thing, because they want to understand more in detail about the startup. Like I said, investor cannot understand everything, and they also want to build a relationship as well. And even if they say no, you don't need to worry too much, kind of thing, because you will find a proper investor for you. And not only that, but also, I mean, from the perspective of investor, I like this startup, I like this founder, but sometimes I cannot invest it because investor also has an allocation of money. So timing is also important. Anyway, so if and another thing is VC can introduce other investor or other partner, other opportunity as well. So I recommend you keep the relationship all the time, because it's just my opinion, it's not only for the fundraising, as a founder, as an entrepreneur, important lesson to learn. This is one sentence that I always keep in mind when I try to business: never close door to anyone, which is very important. I mean, of course, if it is toxic relationship, of course you need to close door. But if it is not a toxic relationship, there's no point closing the door. I mean, at least uh, keep them like I mean you don't need to close the door completely, kind of thing. You don't know when you can get connected with them again for other business or other project, kind of thing. And the second thing, third thing, full pitch is only for the internal IR. It's like I said in the previous slide. I mean giving too much information, especially in detail technology information during the pitch session is not a good idea, because if investors are interested, they are going to ask you for a follow-up meeting, kind of thing. And the follow-up email is important, kind of thing. This is kind of formality, but when you send the email, it is always better if you can send like summarizing information in the email about what you have been doing, kind of thing, because they will save a lot of time for the investor. And about the valuation, it's very tricky kind of thing. It's a startup don't want to discuss about the valuation with the investor, but this is very important. And when actually I got some kind of certification or something from the Oxford University. This was about the how to become a venture capital, kind of thing. And one of the section was about the valuation, and the professor was used to one sentence which hit me hard, heavily. I still remember the one sentence is: valuation, art or science. It was best sentence for me, which means valuation is not a science for me. I mean it's just about how to justify your business, kind of thing. So for someone it can be the 1 million valuation, and for the other person it can be the 10 million valuation. And sometimes even after 1 year, 1 million valuation can be the 100 valuation as well. This kind of, because this is the social science. Valuation is a social science, not the natural science, kind of thing. And another, but one of the reasons why this is very important is kind of thing is like let's say from the perspective of the investor, valuation is price of the startup, which means you go to the department store and you try to buy the watch. You find a really good watch that you want to buy, but there's no price tag. Then you cannot buy the watch, to be honest. It's the same situation. That's why investor, after asking some kind of question later, at the last meeting or something, they always ask you, so what's your valuation, kind of thing? Because without that, we cannot. we cannot calculate, not even decision kind of thing, because valuation is like some kind of price of the startup and uh, measurement of the startup. And just because you have a low bid valuation right now doesn't mean that you are going to get the low bid valuation when you exit kind of thing. Anyway, this is just how we compare the startup with other startup kind of thing. So always remember that, because that is very important. And especially when you are in the like early stage, like from pre-seed to before pre-seed A kind of thing, having a too high valuation is not good. It's never good for a startup, because sometimes always early stage startup, they are not familiar with the fundraising, so they think naturally think the higher valuation better for their business kind of thing, which is not. I mean, the fundraising also important strategy for your growth. Like a If you get a too high valuation at the early stage, and if you don't make enough traction, in that case, business is going well, but you cannot raise money at the later stage kind of thing. So you need to understand that. I mean, because the investor only get the exit when you get the exit when you do the like a IPO or M&A kind of thing. So business and the capital market is not the same. It's a different thing. So you gotta understand the difference. Yeah, projection and cap table modeling, and these two things is also missing a lot from the founder kind of thing. And if I can let you, if I can explain about the finance projection, it's more like a kind of thing. Let's say you go to the spot, like a store, and you try to buy the milk in Korea. You come to Korea first time and you try to buy the milk, and you find the one potential milk that you want to buy, but when you try to read the uh, paper kind of thing, there's no information where it's come from, what is made of, this kind of thing. In that case, you will feel a bit suspicious about the milk kind of thing. It's the same. And so I'm not talking about the in detail projection kind of thing, especially when you are in the early stage. You don't need to in detail information kind of thing, but the basic information is enough. And of course, it cannot be the same when you actually execute your business, but it is about investor trying to understand your scenario in the future kind of thing. So you don't need to worry about, let's say, I expect a 10 million next year, but actually I cannot. What happened if I cannot meet the 10 million kind of? You don't need to worry too much about this kind of thing. Just it's about the setting a scenario of your business kind of thing. And the cap table modeling wise, like it's about how you structure your fundraising, not only this fund but also later on kind of thing. Because of the cap table modeling kind of thing, valuation is important. Like I said, if you set up the cap table if you don't care about the cap table early on, you might have some problem when you try to raise later stage money kind of thing. Oh, sorry. Yeah, this is also just one example of the startup that we were trying to invest. Startup founder was really strong, like technology was good, and it was biohealthcare tech, and everything was good actually. Uh, they already got the 1 billion USD from the acceleration and the government grant kind of thing, and they already have a really good clear monetization plan and the licensing strategy, because for the biohealthcare startup, knowing licensing strategy is very important. So it was a good startup, but we didn't involve with it because it was a pre-series A round, and they were asking 2 billion for 5% stake, and which was too risky. I mean, they are not even making any revenue at all, and the kind of thing. So if you
เอา
are
ไหนบอก
asking
เรียบ
for the
ร้อยแล้ว
too high valuation, you might lose the investor kind of thing. And yeah.
เอาพี่นึกว่าถึงแล้วเห็นบอกเรียบร้อยแล้ว
Oh,
ถึงแล้วกี่โมงจะถึงกี่โมง
sorry, maybe I spoke too much, I guess. As I will make it quick. So,
20 นาทีนะจะบ
some
อกว่า
factor that make you very quickly. this kind. First one is very important as well. Of course, like responding to the market feedback, especially customer, is important. And the second thing is common mistake that founder make a lot, like okay, I raise money and hire the people, they resolve everything. But actually, it's not. So always, just my opinion is I also operating my own company as well, managing people, empowering people, or motivating people. This kind of like people management is more important than actual business, in my opinion. So always think about it. You should think about it. And and another thing is the fifth one, like I said, VC funding is not always the answer. It will more depend on the what kind of situation you are in currently and what kind of business you are doing. Kind of always think about it. And before summarize my presentation, I just want to emphasize three things. If you are a bit late stage, at least Series A or something, you gotta understand or you gotta have a clear unit economy, because that way, if you have a clear unit economy, investor will invest in very quickly. And another thing is timing is very important. And like I said, business is more about the timing than timing actually. And the third thing, which is very important, because usually tech startup founder, their background, a lot of their background are from the tech engineering kind of thing. They are confused the concept between the marketing and growth. So they think that if they spend a lot of money for the marketing, which is like a promotion, digital marketing kind of thing, they will going to make revenue straight away kind of thing, which is make it happen a lot when they hit the Series A around. But actually marketing and growth is very different. So marketing is more about the communication, PR, branding kind of thing, but the growth is more about the sales, customer acquisition, growth economic kind of thing, and the growth is much more important than marketing. So you gotta focus on the marketing after you make initial growth, because without the initial growth, even if you are spending a lot of time and even if you spend a lot of money on marketing, nothing happens, to be honest. So understanding the difference between the marketing and growth is very important for early stage founder. Yeah, this is just the information. Yeah, always preparation king, and whenever you meet the investor, try to prepare well. Yeah, just the three things that I want to comment before summarize the presentation. Yeah, how committed to the ecosystem, and relevant to Korean market, and the previous experience in the ecosystem. This kind of thing is also important. It could be just a small thing, but of course, because as you know, VC investment is like at least 5 to 10 years relationship with the founder. So they always trying to see if I can be with this guy, or if I can be with this founder for the last 5 to 10 years, kind of thing. So this kind of thing can be very important. Yeah, this was the presentation that I prepared, and like I said, Simsan was also the our founder itself, and we also penetrate the Korean market as a business startup, let's say. So we were in the same situation, and we are still in the same situation. So feel free to ask any question. Yeah.
For the before we wrap, checking out the online participant questions. So if you guys do have any questions, or like maybe between the like previous lectures and the second session,